Well, look, if you're going to summarise it in a nutshell, Pete, what we're seeing at the moment where global markets are concerned is a continued march higher when it comes to long-term interest rates in particular. And that is creating headwinds where stocks are concerned. So we've seen that in a variety of cases, both in the US and Europe last night. In the case of the US, we've seen 10-year government bonds, for example, at their highest levels since 2007, so 16-year high. So a 10-year Treasury note. This is what we look at carefully, Pete. We measure this in basis points, up 11 basis points to 4.67%. That is a high level, and that is problematic as far as stocks are concerned. And that was exactly what we saw. We've still got about 10 minutes of the session to go because of that quirk in terms of changing to summertime. But as we speak right now, we've got the Dow and the S&P 500 down by 0.4%. The Nasdaq is up by about 1/3%. There were measures of activity across Europe and the US last night with manufacturing surveys. There were some Phillips in terms of some positive improvements in a contractionary situation. That was the case in the US. Wasn't enough to shift sentiment terribly much where stocks are concerned. European markets generally lower, down by around 0.9% in the case of the German market. The futures are pointing to a decline of around 1.4% for the ASX 200 this morning. A big day with the first interest rate decision of the new Bullock administration at the RBA. It's an important day in that respect in terms of communicating a new era when it comes to the RBA.
New era. All right, Tom, thank you.